Today, we announce our half-year results to the market. Group performance is broadly in line with our expectation, reflects the continued strengthening of our luxury wine portfolio and the strong consumer demand for luxury brands. There is no question this is a challenging operating environment, but I'm very pleased with our underlying performance. Declines in the half reflect our deliberate approach to phasing Penfolds bin and icon shipments across the year. Penfolds continues its strong momentum, particularly in Asia and Australia, and Treasury America's luxury portfolio has now returned to growth. Luxury revenue grew globally, offsetting our lower premium commercial revenue, which drove earnings declines in Treasury Americas and Treasury Premium brands. Revenue per case is up, driven by the continued premiumisation of our portfolio, and market trends are broadly in line with our expectations. What that means is consumer demand for luxury wine remains strong in our key markets, and we see ongoing resilience in premium and a continued shift away from commercial wine. We expect these trends to continue through the rest of the financial year. Now, looking ahead, we're focused on three key areas. One, the review of tariffs on Australian wine remains ongoing, with the determination anticipated in late March. We are prepared and we're well placed to re-establish ourselves and our Australian portfolio in China should the review result in the removal of these tariffs. Number two, following the acquisition of TWE, Treasury Americas will remain focused on driving strength as the leading luxury wine portfolio in the US. And three, work is now underway to assess the future operating model for our global portfolio of premium brands, and specific focus on how we best leverage scale across our global network, with a determination to be made this calendar year. And now let's have a look at each division's performance for the half. Penfolds continues to see strong consumer demand in our key markets globally. This is testament to the way Penfolds is connecting with a broad range of luxury consumers. Earnings and revenue increased, driven by strong momentum across the full portfolio, particularly in Asia and Australia. Some highlights was one by Penfolds launch with our creative partner Nego. We introduced CWT 521, our first bin level wine sourced from mainland China. And Penfolds Champagne Cuvée with Champagne T&O, the most recent announcement. Treasury America's luxury wine portfolio, TWE, Frank Family, Stag's Leap, and Beaulieu Vineyard is now the leading luxury portfolio in the United States. And that portfolio has returned to growth, which offset some of the revenue decline in the premium portfolio. In 19 Crimes, our pack transition is displaying positive results, and it is now the official partner for UFC in the US. We reopened Sterling Vineyards, a great achievement and great to be back, and we've seen increased demand for Frank Family wines across all metrics. In our Treasury Premium Brands business, volume and overall revenue did decline due to less commercial wine being sold and reduced premium portfolio shipments into Asia. But outside of Asia, our revenue was in line with last year. The priority portfolio, which includes 19 Crimes, Squealing Pig, Wynns and Pepperjack, continues to grow, particularly in Australia and the UK. So overall, a pleasing performance in line with our expectations that demonstrates great progress on delivery of our strategy. There's no question that this was a challenging operating environment. I'm pleased that our group performance delivered to expectations this half in that environment. Looking ahead, we expect trading conditions to broadly be consistent for the rest of the year and a stronger second half across our business. I look forward to giving you my next update.